Assuming it's a great company in a strong local market that has intrinsic economic moats, basically meaning it's a company that can't easily be taken over by another competitor and another company can't gobble up its market share. Assuming those things are true, assuming it already has strong management in place, assuming it already has strong brand loyalty, and assuming it already has a strong book of business, if those things are true, then I absolutely love buying small to mid-sized companies, especially in that seven-figure deal range. Yes, there's problems. You're dealing with questionable tax returns sometimes. Yes, there's challenges. Sometimes you're working with brokers as opposed to business investment bankers. Like, there are imperfections. That being said, I absolutely love buying these kinds of companies, and there's three core reasons why. Number one is you're buying these companies usually at between 2 to 4 times earnings. And that's just a wonderful value arbitrage that you're never going to find on the stock market. You're never going to find that in real estate. That's the equivalent of somewhere between a 25 to a 50 cap. For those of you who have invested in real estate, you know you're just not going to find 25 to 50 caps at scale. So that's the first reason I just love this kind of investment. The next reason is really there's not a lot of competition. And when I say competition, of course there is competition. But I'm saying as far as other buyers, you're not competing with Sam Zell. You're not competing with Blackstone. You're not competing with Goldman Sachs. You're not competing with Berkshire Hathaway. Nowhere close. You're not dealing with the big leaguers, the AAA players, the AA players. I mean, you really are in a smaller pond. And albeit that means that you're not going to be able to get 1 million people great returns when you're buying a 7-figure asset or even an 8-figure business. Certainly for that core group of investors that you partner with and for the management team and the acquisition team that's making this thing happen, there's a lot of meat on the bone to be had. And then lastly, the third reason we love buying these 7-figure and then, getting into the 8-figure companies is because of all the value add opportunities that there truly are. Oftentimes you're buying these companies from mom and pops. They're near retirement age. They're usually entering their 60s, if not even their 70s. Oftentimes there's clear software that you can implement into the business to really create a lot more speed and efficiency. Usually there's just a ton of value add opportunities that you can implement into these businesses fairly easily to quickly grow the revenue, to keep the profitability where it was, if not even increase the percentage of profitability that you're taking all the way to the bottom line. Look, we love buying these 7 and 8-figure companies. It's not to say that maybe in 5 or 10 years from now, we still intend to be in this space. But while we're here, we're embracing it. Yes, it comes with imperfection. You can't use a KPMG and a Skadden to do your white collar due diligence because there's not enough meat on the bone for those kinds of firms to really have their place. They would just eat up all of the basis because they're obviously very expensive firms, those are. So there are certain nuances with doing these 7 and 8-figure deals in a way that really makes it successful for everybody involved, whether it's the lenders, whether it's the acquisition team, which I lead, right? Or whether it's for investors. There's certain nuance to getting this right. It's not the same strategy that I'm sure a Blackstone or a Goldman Sachs is using, obviously, but we've really found that this is a great niche for us to play in. And when we find niche businesses in niche marketplaces that provide a great product or service, and they've been doing so for a long time, and their customers really love this product or service, and then you have an owner or an ownership group that's looking to sell, we love to be that buying party. We take a lot of pride in finding both great on-market and off-market deals. And look, we think if you're thinking about getting into this space and buying companies yourself, it's a great place to start. Or if you're an investor, we candidly think it's a great opportunity to invest, because the dividend plus equity upside that one can offer when you're putting these kinds of deals together, it's darn near unparalleled. These are really killer returns because, again, you're buying these businesses at 2 to 4 times earnings. It's just very difficult to do that once you get up into the bigger transaction sizes. It's just not going to happen up there.
Hey, it's Jason Rogers. Thank you so much for watching the video. Be sure to subscribe, thumbs up the video, and for more, go to jasonpaulrogers.com.